Bitcoin is the apex property of the human race. There is no property invented in the history of mankind that is better than Bitcoin. Not land, not gold, not silver, not stocks, not bonds, not the giant stone coin of the Yap people, not NFTs, not art, not baseball cards, nothing.
It's oriented like CNBC. What is the differences you see in the way that they approach, your take on Bitcoin?
I think the crypto-oriented interviewers have a much more intricate technical view, and they typically want to look at Bitcoin versus all the other altcoins. Whereas the mainstream media and the mainstream interviewers are generally don't have so much of an intricate understanding of either the technology or the philosophy, the underlying theory of crypto. And so they're more interested in probably just the major investment themes. And oftentimes they're interested in my views as a corporate public company CEO, because they relate to that. Whereas in the crypto community, they're a lot more interested in the nuances of crypto and the differences in approach.
Yeah. Sometimes when I'm watching interviews you do with CNBC or other entities, I'm just like, I want to know what's going through your head, because like they ask you questions that are just like so asinine sometimes. It's like almost like to be so intelligent and be so involved in the traditional finance world, like they can't grasp Bitcoin. Like, what do you think is the thing that holds them back from being able to really understand, that this is not a stock, it's something totally different?
A frame of reference. I think if you have a certain frame of reference and you've always lived in that frame of reference, then things that are moving through your frame of reference look like they're in motion. Whereas if you have a different frame of, maybe a broader frame of reference, and you step back, you interpret it differently. It's like if I kick you off a mountain and you're falling, and you understand the big frame of reference, you understand that gravity is pulling you down. The mountain is not rising. The mountain is not a bubble. The mountain is not rallying. The mountain is, you are falling, right? You're in free fall. But on the other hand, if you have a very strong ego and you can't imagine free falling ever, you think the world revolves around you, your view is, oh, the mountain seems to be going up at and what is the word, like an unsustainable rate of growth. There's a bubble in the mountain. There'll be a regression to the mean. Nothing can be that tall. Eventually the mountain will come back to earth. I think the best example would be if I'm a mainstream investor and I look at my performance over the past 12 months, I think I'm a genius because my stock portfolio has been going up. And so I actually think I'm a really good stock picker. The famous example of, look at what we did in the federal government. We made the stock market go up. So that's a frame of reference. But another frame of reference is we just devalued the dollar by 30%. Exactly. And the stock market is constant. So which of those two frames of reference do you have? And if you are so incredibly steeped in the one frame of reference, you can't imagine the other.
Yeah. It's paradigm shift. And a lot of people have a hard time with that. And, I've interviewed a lot of people that have, made a lot of money in traditional finance. And it seems like those people, they're very comfortable with how they've made their money. And I think, projecting in the future and thinking about what things are going to look like in technology and with cryptocurrency, they don't even want to think about that. They just want to think about, this is the way I've done it before. This is the way we made our money, and we were happy with that. And those people don't want to change. I mean, if you look at Warren Buffett, for instance, doesn't own a lot of tech stocks. It's a little beyond, his expertise. But in reality, like, that doesn't mean tech stocks were not going to crush it. Does that make sense?
Well, I mean, again, let's talk about frame of reference. If you've lived in a world where investing was synonymous with choosing stocks, and most of Warren Buffett's writing is all about choosing stocks. Yes. If investments are synonymous with choosing stocks, then of course the success is to choose the right stock.
Right.
But I can, if you lived in the Weimar Republic, or if you lived in Venezuela, or if you lived in Zimbabwe when the entire currency crashed, then there are many, many macroeconomic frames of reference where no stock works.
Yeah.
In fact, there are macroeconomic situations where all of the value drains out of the stock, but not out of the debt. Like a company can have a capital structure with $1 billion in equity and 0 debt, or $1 billion in debt and 0 equity. So if you take a broader view, you could say, well, it's possible that you can make money in debt but not equity, or it's possible you can make money in debt and equity, or it's possible I can conceive of a situation where the currency collapses, you can't make money in debt or equity, right? And so therefore, I think that people that have lived in stable environments where all of the components, the relationship between debt and equity and currency and real estate and tax, all of those are stable, they can form models and they can form heuristics. And then you can look back at the model and use it. But if I were to change maybe the gravitational constant, right? The force of gravity, if I doubled it or tripled it, all of your architecture textbooks and all of your tables
are all wrong.
They're all wrong.
Yeah.
And so I think the difference is if you're an engineer and you can reason from first principles, then you can take a clean sheet of paper, and when you have a massive macroeconomic paradigm shift, you can rederive your models. We call the difference between understanding the homogeneous solution, the differential equation, or the particular solution. The particular solution is a lazy person's solution to the problem, and it works 99% of the time, a million times faster, as long as nobody changes all of the underlying premises and boundary conditions. Yeah. And so people get lazy and they live with that little particular solution. And then when one of the premises or one of the boundary conditions changes, all your particular differential equations are worthless. And then you have to derive from first principles or underlying math. And if you're not a good mathematician, or if you're not capable of deriving from first principles, you're a totally fish out of water.
Yeah. Well, I'm just lucky I grew up when we were not allowed to use calculators in our class. So I'm good at math.
I'll give you 2 other examples. One, a lot of basic investment principles work if the cost of capital is 8%. And when the cost of capital goes to 24%, like value stocks don't work anymore. Right. And by the way, misunderstanding inflation. If you think inflation is CPI, but the real cost of capital is 8%, you're only off by 6%. And you've got a bias in your analysis, but it's 6% and divided, into the rule of 72. It means that your mistake's going to be egregious in about 15 years. So you're kind of making a mistake that manifests itself over a decade. But when the cost of capital goes to 24% and CPI goes to 0%, then your error is going to manifest itself in 36 months. Yeah. And so if you really misunderstand something when the numbers change dramatically, then your bias becomes fatal. One more example. All these people living with their charts and their models, right? Charts only work in the rear view mirror. So absolutely. If you're in a closed system and the economic actions and the economic wherewithal of all the actors and their behaviors are all consistent and reoccurring with some cyclicality, you can use charts and models. But if it's an open system and I introduce some external new actor into the system, all your models are irrelevant, all your charts are irrelevant. And the colloquial example would be you study kids playing basketball in the school playground your entire life, and you know generally how that ends. And all those models are useful except when Godzilla shows up to the playground. Yeah. And then it doesn't matter anymore. So the world's full of, I think, conventional macroeconomists and conventional investors and conventional media, and they have been doing the same thing for 30 years. And they thought that 10 years ago, they tweaked a few models, and they're doing great for 10 years. And in the last 12 months, every financial portfolio, with the exception of long bonds, is generally up. And so if you were smart enough not to be holding 10 to 30-year T-bills for the last 12 months, you can tell yourself that you're a genius and you can ignore rebuilding all your models. And so I really think the conventional investment community doesn't have this urgent need to throw their models away and rebuild them, because the S&P and the NASDAQ are cushioning this paradigm shift.
Yeah, I think so. And, I think we know a lot of these models and a lot of the way that our government calculates, inflation and different, even if you go to unemployment and things like that, that they're always changing the game, and it's always smoke and mirrors to try to make themselves look better. And I think we see that too. But what I want to ask you is, MicroStrategy, obviously your company, I never heard of them before you guys bought Bitcoin. And now it seems like Bitcoin is kind of become your model. And I want to get into a lot of that. But I want to know specifically from you as a CEO, like, what makes you different than all of these other traditional finance people that we're talking about? Like, what was the moment for you where you got it? And like, when was that? Talking specifically about Bitcoin.
I think by the end of the second quarter, what I realized is we had a low growth, cash rich company. We're going to generate $75 million a year in cash flow for the next decade. We weren't going to grow 20, 30, 40% a year. We weren't, the next screaming Zoom. We were going to have a stable, mature business that made a lot of money. And we had a block of $500 million of cash on our balance sheet. And I realized that no one cared, and we were viewed as being utter failures, almost to be discarded by Wall Street. It's almost like no one in the world wants to invest in a company that generates cash, that's well run with a huge amount of cash.